We all want our investments to grow, right? To compound. But have you ever really stopped and wondered, what is my money actually doing while it's out there? What is it funding? Today, we're going to dig into exactly that. We're exploring how you can build your wealth and help build a better world, all at the same time.
So let's just get right to it. Think about your portfolio for a second. Is your money, maybe without you even realizing it, funding the very problems we read about in the news every day? Or is it part of the solution? That's the core dilemma we're going to unpack.
For the longest time, investing was pretty straightforward. Find the highest possible return, and that's it. But that's changing, and it's changing fast. More and more of us are facing this dilemma. Do I just chase profits no matter what, even if it kind of goes against my values and the world I actually want to live in?
We all get the magic of compounding profits, right? Your money makes more money, and on it goes. It's powerful stuff. But now, look at this. What if we could take that same incredible force and apply it to our purpose? What if every single rupee we invested also compounded our positive impact on the world? Now that is a totally game-changing idea.
And that brings us to the solution. There's this framework that's designed to bridge that exact gap between our profits and our principles. It's called ESG investing. And believe me, it is picking up some serious steam, especially right here in India. So what is this ESG thing anyway? It sounds complicated, but it's actually super simple. It's just a way to look at companies beyond their profit margins. E is for environmental, how does the company treat the planet? S is for social, how does it treat people? We're talking employees, customers, the whole community. And G is for governance. Is the company run in a fair, ethical, and transparent way? That's it. This slide just lays it out so clearly. On the one hand, you've got the old way, traditional funds, where the only goal is to maximize profit, full stop. But then on the other side, you've got the ESG approach. Look, profit is still absolutely key, but it's balanced with a real focus on making a positive impact. They're not blind to their impact. They actually screen for it.
Okay, I know what you're thinking. This all sounds really nice, but does being good mean I have to make less money? This is probably the single biggest myth holding people back, and honestly, we are about to just bust it wide open.
This is the million-dollar question, isn't it? Or maybe the Crore question. Does investing ethically mean you're going to get lower returns? For a long time, people just assumed the answer was yes. But it turns out the actual data tells a very, very different story. And here it is, the proof. Just look at this chart. That bar on the left, that's the benchmark index, giving about a 12% return over 5 years. Not bad, pretty standard. But now look at the bar for Indian ESG funds on the right. A full 15%. Wow. They didn't just keep up with the market, they actually beat it. This isn't about giving up returns, it's about finding better ones.
So here's the bottom line, the eye-opening truth. Investing with your values in India hasn't meant sacrificing your returns. Actually, it's often meant boosting them. So that old idea that you have to choose between doing good and doing well, it's officially a myth.
And this isn't just some small niche thing. We're talking big numbers here. Projections show that ESG assets in India could hit a staggering 40 lakh crore by 2030. This is moving fast, and it's becoming the future of how we invest.
So the big question is, how? How are these funds managing to pull off such strong returns while still focusing on making an impact? Let's break down the actual strategy.
It really comes down to 3 smart moves. First, they avoid unnecessary risk. By staying away from polluting industries like tobacco and oil, they actually sidestep some of the big market crashes we saw in 2020. Second, they're all about compounding growth by investing in the future. Think solar power, electric vehicles, that kind of stuff. And third, they're backing winners, like innovative, women-led companies that deliver fantastic results. It's not just a moral strategy, it's a smarter one.
Okay, so you can see the potential. The data makes sense. The next logical question is, how do I actually get started with this? Well, the good news is, it's way simpler than you might think. Getting started is actually pretty easy. Here's a simple 2-step plan. You don't have to sell everything and start over. Just consider allocating, say, 20 to 30% of your equity portfolio into an ESG fund. Then, just once a year, take a look and rebalance to keep things on track. It's a really simple, manageable way to start making a real difference. Oh, and here's a little bonus for you. A lot of these ESG funds also come in ELSS versions. Equity-linked savings schemes, the tax-saving mutual funds, so you can get the strong performance, the positive impact, and a nice tax deduction. It's a real win-win-win situation. All right, let's just zoom out for a final thought here.
because this is about more than just numbers on a screen or even a tax break. This is about the legacy your money is building over the long term.
So I'll leave you with this question. 10 years from now, when you look back at what your investments have helped build, what do you want that story to be? Will it just be about profits, or will it be about profits that also helped build a cleaner, a healthier, and a more equitable India? The choice, really, is yours.
Because in the end, that's what this all boils down to. It's this incredibly powerful yet simple idea that completely redefines what our money can do. It's not just about compounding. It's about compounding with conscience. Thanks for joining me.